Good morning. Welcome back to the Broadcast Retirement Network. This is BRN AM for Friday, June 21st, 2024. And our top story today, how to find missing or unclaimed life insurance. And joining me now to discuss this and a lot more, Phillip Snyder is a Senior Vice President at the Warner Companies. And full disclosure, he's also my dad. Dad, so great to see you again. Thanks so much for joining us on the program this morning.
Good morning. Always my pleasure, Jeff.
The pleasure is certainly ours. Dad, I've got a hypothetical. It's probably not a hypothetical, but I've got a scenario I want to ask you about with life insurance. Let's say someone passes away and his or her loved ones don't know whether or not the individual had a life insurance policy. Or for that matter, maybe a beneficiary or someone who is a participant in a life insurance plan doesn't know if they have a life insurance policy. How do you find out if someone has a life insurance policy?
Okay, well, in an ideal world, people would be organized.
Right, but ideal, that went out the window the moment the show started.
Yeah, but that's exactly right. So, and this happens a lot. In fact, I had a question not long ago from a CPA friend of mine wanting to know if her father, who recently passed away, he had one policy, but she thought he had a second one. Turns out he didn't, but she thought that was the case. I guess there are lots of ways to find out. I think the first place I would start, if the person who has passed away was actively employed during the time he or she passed away, then I guess I would go speak to that employer. That person may have been a participant in an employer paid and sponsored, let's call it a group term plan, for example. That could provide a multiple of that individual's salary. It could be 1 times, 2 times, 3 times. That could be a benefit. Or that individual could have participated in an optional insurance plan offered by the employer, whether that was employee paid or otherwise. So that would be a good place to start, I think.
Okay. Now, what about, say they've done that, and usually when someone passes, you're going to get the HR department, you're going to submit a death certificate and all the paperwork comes your way. So that's all done typically through HR. So what about if that doesn't yield anything, but I still think that someone may have an insurance policy? Can I go to the state government or to the insurance company and ask?
Well, yeah, certainly you could call the state insurance department. You might find that they could be helpful. I've never had that experience to actually go through the state insurance department to see if there was a policy in existence. But I don't know that the State Department could direct you to, could internally know the answer to that question. There's just so many life insurance companies. I don't think they monitor every policy that's ever been sold, but they could help you and give you some guidance as to what your next step ought to be. But the other thing I would do is, let's say you have homeowners and or auto insurance with a company. It could well be that you might have a life policy there that no one even knew about. I mean, that's a distinct possibility. So that's a place that I might go to look as well. I might talk to, depending on the individual, their CPA, their attorney, their financial advisor, close family members who might be aware of something. There are also websites you could go to that could lend some assistance. I've never used them. But I have looked them up, and there's probably a fee involved with that. So there are opportunities to find policies. If you're a beneficiary of a policy, and you would know that if you don't know there's a policy, but if you are in fact a beneficiary, the insurance company would certainly respond to your interest in a policy if it existed. On the other hand, if there's a policy in existence to which you're not a beneficiary and or an owner, then you may have difficulty getting specific information from a particular company. There could be a policy in force, but they may not be legally bound or legally authorized to give you specifics on the policy. in which case you're going to have to find another way to determine that. But if you're not interested, if you have no interest in the policy, then chances are you're not going to pursue it as an individual. So, but this happens a lot, a great deal. If you have a policy and you know of a policy and you're the beneficiary, then you need to notify the insurance company in question that the insured has passed away, obtain a claim form, obtain a death certificate. You can either get that directly from the state, or oftentimes funeral homes will obtain them, and you can pay them for them. There's probably a modest charge for that. But and so you need to complete the claim form, send it into the insurance company with a death certificate, and typically these things are processed pretty quickly. So there are a lot of ways to do this.
Right. Okay. So let's go on the flip side. So let's talk about preventative measures. And I'm not worried about the uber wealthy person. I'm talking about just regular people, real Americans like myself and yourself.
Well,
how do I prevent? Obviously, I mean, we were making light of it, but documentation matters. Keeping track and records. So how do you prevent this from occurring? Is it simply just writing stuff down?
Yeah,
making sure
you're
you haven't
dealing with
loaded
people. Yeah, you're dealing with people. And so people have their idiosyncrasies, their interests. Some people are organized, some people are not. I mean, I remember years ago calling on a surgeon, highly accomplished, highly educated. When I first walked in his house, he was referred to me by a CPA. He handed me a box, maybe a 2 foot by 2 foot tall box full of papers. And he said, we need to go through these. So
we meaning you.
he thought I was there to help him go through it. And I certainly did. They were nice people. I don't know that we ever did anything in a business.
But you got him organized, at least for that moment.
So, and they were a mess. Okay. And that's, among professional people, generally that's an exception, but you just never know. There are organizers you can buy. You could go to, you can create your own, or you can go buy an organizer. You can list all your bank accounts. Maybe there's one, maybe there's none, your checking account. Everything and anything financial, or anything and everything an individual owns, or owns it collectively, let's say with a spouse in some sort of joint tenancy, you can list all those items. You can list your insurance policies. You just need the impetus to do it. And then you need a mechanism for following through. Maybe it's somebody like me bugging you to get it done. Okay.
Or maybe they're watching the program.
Well, that would be.
Well, hopefully. I mean, we hope.
It's not hard to do.
We hope we're not talking to dead air.
Yeah, it's not hard to do for most people, because candidly, most people don't have that many things to list. Average people, They own a home, they're buying a home, they own a car, they're paying off a car, they have a bank account, maybe they have some money invested somewhere, cash savings somewhere in a bank, benefits through their employer, a retirement plan. That could constitute everything they own. So, it's not that hard, but you got to do it. And so it's like anything else, most people will, I guess, kick the proverbial can down the road. I'm 50 years old today. Everybody in my family lived to 90. I got 40 years to do it. Maybe yes, maybe no. You just got to do it, because you're making life better for yourself and easier for your heirs that way.
Yeah, absolutely. Good. Well said. Dad, I want to take a very quick break. When we come back, we're going to talk about life settlements. What are they? How do you use them, or how can you use them? You're going to want to stay tuned right here on BRN AM. Now is your opportunity to co-create content around any topic on the First Lifestyle and Wellness Network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device. Welcome back. We're joined this morning by Phillip Snyder, Senior Vice President of the Warner Companies. And full disclosure, he's also my dad. Dad, thanks so much for sticking with us this morning.
Okay, happy to be here, Jeff. Hope it's helpful.
Yeah, and I see the commercials. I don't watch a lot of terrestrial TV anymore, but when I do, there are always these life settlement commercials,
Yeah.
reverse mortgages, and I figured I would ask you since it has the word life in it, and we could talk about it. What exactly is a life settlement?
All right. A life settlement is well. Let me express it differently. Life insurance policies are products, right? They're things that have value. They have value certainly to the person who purchased them and to the potential beneficiaries, but they may have value to a third party as well. Um, Life insurance policies can be sold. There's an entire industry out there that will market products to a variety of institutional buyers. There could be 10 or 15 people or companies out there who may buy these policies because the policies have value. They may have intrinsic value in terms of cash in the policy. They may have a modest premium to be paid to sustain the death benefit. But by and large, anybody who owns a life insurance policy, before just giving it up and throwing it away or just not paying a premium, for example, ought to consider a life settlement. Life settlement is simply, I have a product, I have a policy, it has value to it. Maybe its value is only at my death, but it's worth something, and someone may be interested in paying me for it rather than me getting little or nothing for it.
So to that end, is it a specific type of life insurance policy that you have to hold? For example, does it have to be a whole life policy, or can it be term life? Something we've talked about the differences here on this network with you.
Yeah. Well, let's better define who's a prospect, and then we can talk about that. Uh,
Yep.
a real prospect is someone who is, I would say, certainly over age 65, more likely over age 70, for obvious reasons. Their death is going to be not too far into the future and quantifiable and discountable to a present value. So you have to be, to make it work really effectively, you need to be older. You need to be not in great health, because the better your health, the greater the longevity that you'll have, which defers the collection of those insurance proceeds by the buyer at death. And you have to look at the environment in which you're selling the policy. Today, interest rates are high. So any buyer of a policy is going to want to make more money on that policy because the alternative investments they can put their money into, for example, are already going to produce higher yields because of interest rates. So an ideal prospect to sell a policy would be someone, I would say, really 70 or older, in not wonderful health, who doesn't want the policy, and where the policy is a competitively priced policy, so that the premiums that will ultimately have to be paid by the buyer are reasonable for the risk. So it's just a financial transaction.
So if I'm understanding correctly, you're basically passing on the policy to somebody else. They're giving you something for it, which I'm presuming is
Cash.
money,
Cash.
cash. That's probably taxable. We can talk about that in a second.
Okay.
And then upon your death, or if it's me handing over this policy to someone else, they get paid.
That's
Is that
they
okay?
get
So
paid
it's still contingent on my expiration.
Oh, yeah, no question. We've done a number of these through our office. They're complicated transactions, particularly with larger policies. Now, having said that, there are companies, you see them advertised on TV, you mentioned that, who are direct buyers of these
Right.
policies. You don't really need to go through someone such as me, an insurance broker, or someone who can assist with that process. You could go direct to those companies. They may or may not be interested. Again, depends on the type of policy. More typically, they're permanent type policies. You said whole life, could be universal life, but they're policies that are sustainable, where you can quantify the premiums until death occurs. So they're typically are lifetime policies, permanent policies. On the other hand, you could, if you're an older person and you have a term policy, and you're within the term conversion period, that might be a viable product to sell as well. So I would say anyone who has a policy, I see these ads on TV, 100,000 or more,
Yeah,
that's a small amount to sell.
right,
So
right. But,
typically, go ahead. I'm sorry.
no, no, finish your thought. I interrupted
No,
you.
no. So typically, you're looking to sell a larger face amount policy, that a permanent policy, if you have it, that you no longer want, and you're going to go to the marketplace and find out what people are willing to pay for it. And it basically becomes an auction, other than from a direct buyer. Your broker goes to an intermediary in that business. They do all the analysis, they gather your medical records, they do some independent appraisals of life expectancy. They do projections as to what it's going to cost to continue the policy for the buyer, and they put it out to bid. And there could
And
be 5 bidders, there could be 2 bidders, there could be 12 bidders. So you're gonna try and buy, put it out there and see what people are willing to pay to buy your policy.
now let's talk about in a couple minutes we have less. Let's talk about the cost. So Jeffrey Snyder, I'm not age 70, not yet, but if I were to do this, what do I have to pay it? So what are the costs to me as the seller? And then ultimately, when I get that cash back, what is the taxable, what's the taxability on that? Because am I taxed at ordinary income, or do I get taxed at some ridiculous rate, or do I get taxed at all?
Yeah, well, let's deal with the first question. What does it cost you as a seller? If you deal with a direct buyer, you won't know the cost. There is no cost essentially, because the buyer is the direct buyer. They're not an intermediary.
Right.
If you're selling through an intermediary, then typically the broker, someone such as myself, is going to get a piece of the overall price, that the
Okay.
sales price. And the people who do the work, who put it out to bid, who compile, put the file together, as it were, that then is put out to auction, those people have to get paid as well. Some of those fees are set in stone by a collection of people, but I think those fees can be flexible. I've seen 8%, I've seen 25%. 25 seeming like a pretty large number.
That seems like a pretty big amount
It
of
is,
money.
it is,
I
but
mean,
we've seen it.
I'd want to negotiate
Yeah,
that
we wouldn't,
down.
we wouldn't do that. That's not in good faith, I think, but by and large, so, you can negotiate the fees to some extent. And you can, if you don't have to complete the deal, there's no cost to you as the seller at all, because the only cost to you is if you sell it, is a piece of the sales price. It's as simple as that.
Now the taxability. Talk about taxability real quick.
Well, real quick, generally capital gains. So in other words,
Okay.
whatever I get over what I paid to buy the policy, I paid 5,000 a year for 10 years. I put in $50,000. I sell it for $250,000. Generally, that's a capital gain. On the other hand, if the policy has a cash value in it, and the cash value exceeds, in my example, the $50,000, excuse me, then there'd be ordinary income, to the extent that the sales price includes the gain, the cash that you got over and above the cash value of the policy in excess of the premium. That piece would be ordinary income. So
and who regulates this? Is it still regulated at the state level by the insurance company? And is it well regulated? Is it well regulated?
It is. Buyers are registered with the state. So it can become a complicated transaction. We just did one with people who live in Texas. Of course, we're in Maryland. And it gets complicated. You have to make sure that there's licensing issues, there's regulatory issues. There can be securities issues if it's a variable type policy. So it's not always a simple transaction. It's one that also can take some time. Just to finish the thought, just gathering medical records, having them reviewed, analyzed, getting independent appraisals of life expectancy and evaluations of the policy can take a couple of months. So it's not something that generally happens very quickly or immediately.
And in your example of Texas and Maryland, who gets paid the tax? Where do the taxes get paid, or do they get paid in both states? Because
Well,
if
it's
I'm
the state of
if I'm the
resident.
state of Maryland and the Republic of Texas, I'm like,
Yeah, no,
I want that money.
it's the rate, it's the policy owner's state of residence.
Oh, okay, okay. So
That
you
goes.
just get your firm gets taxed by the state of Maryland. Okay,
Well, we
now
don't get taxed. Our firm doesn't get taxed. We get a piece of the revenue that's generated by working through this process.
right. But my point is, it still goes to the corporate balance
Yeah,
sheet,
but
and therefore
it's
get
a
yeah.
complicated transaction, and it's not for everybody.
No, but it makes it sound so easy on TV. And
Well,
just like those reverse mortgages with Magnum, Tom Selleck, same
mhm.
thing. It's like, yeah, just call this number and everything will
I
be great. We'll just
I
give
guess,
you some
yeah, I
money.
guess it can be easy if I call. I'm not going to mention carrier names, but we know who they are on TV, and they're fine. They serve a purpose. I call, and they can either say, "Well, I don't think your policy is going to be of interest to us," which is probably 80% of all the calls they get.
Yeah,
So that can be a simpler transaction because you're only dealing with one party. But when
right.
you're putting something out to bid, if you have a multi-million-dollar policy, for example, and you put it out to bid, you're gonna the spread in bids can be huge. And then you have a lot of people, just to finish the thought, a lot of these bidders will lowball it. I've seen a range of prices that are with they're eye-opening, from a
Well,
couple
of course
hundred
they're going to
thousand.
lowball it because they think, but knowing that they're competing,
Well,
that's where the intermediary can engage in a
absolutely. That's
in
the
a
only way you'll know if you got a good value is if you put it out the bid. If you
yeah,
deal with a direct buyer and no one else, and the other point is you can't use multiple sources at the same time because they're in conflict. In other
right.
words, I can't go to a direct buyer and at the same time go to a company that would put it out the bid, because in doing so, you're really narrowing the market for yourself. Uh,
Yeah. Well, I don't blame people for trying to do that, but again,
Well,
it's not a fair, a quote unquote fair market.
absolutely. And then at the proverbial end of the day, if you like the deal, you can do it. If you don't like the deal, you don't do it. There's generally
Exactly.
no cost up front.
Yeah. Well, Dad, we're going to have to leave it there. Really interesting conversation. First, we lost life insurance, then we found life insurance, then we tried to pass it through and sell it to somebody else. Thanks so much for joining us. We look forward to having you back on the program
All
again
right.
very soon.
All right. Talk to you soon. Thanks. Bye now.
And that wraps up this episode of BRNAM. Have a topic of interest, someone you think we should talk to? Drop us a line. And don't forget, for all the latest curated news in lifestyle, wellness, finance, tech, so much more in all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content? Well, then visit our website. Hey, we're back again tomorrow for another edition of BRN Weekly. Jane King will be joining us from the NASDAQ to help make sense and break down the markets. I need a lot of help there. And then we'll take a look back at some of our best segments for the week. So until then, I'm Jeff Snyder. Stay safe, keep on saving. And don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.